Good evening, traders. David Dubay over at Polaris Trading Group. In affiliation with Infinity Futures, this is our weekly review and preview for the upcoming week, June 26th through June 30th, 2017. It is Sunday evening, June 25th, approximately 9 o'clock p.m. Getting a little late start. It was a beautiful weekend here in the Northeast, and took the opportunity to do a number of different outside activities here with the family. Before we get to the charts, all right, industry regulations require that we highlight NFA compliance rule 2-29, which in summary states that hypothetical performance results have many inherent limitations, and trading in futures and derivatives on futures is speculative in nature and involves substantial risk of loss. Past performance is not indicative of future results. So with that, let's take a quick review of the S&P sectors, see where the activity was this past week. Okay, so you should be seeing a graphic up there of the performance chart of the S&P 500 sector ETFs, courtesy of StockCharts.com. And for those of you then watching our segments weekly now, this is where we take a look at where the action was in the ETFs, in exchange traded funds, over the past week. And this gives us a broader view of where the monies are flowing into, out of, rotating, basically within the context of various groups. So it was no surprise that the crude oil was down this past week. Okay, so the ETF there down 3.11%. All right, no surprise. All the big refiners and drillers and so forth are involved in that group. The standout, though, was the healthcare group. Now, the healthcare ETA is fairly broad. Within the context of the healthcare group, though, there are sub-industry groups, and really the standout this past week was the biotechnology area. And in that strength in the bios, that actually helped propel the NASDAQ this past week, and holding a strong bid throughout the course of the week, whereas as you can see here, the S&P 500 essentially didn't really go anywhere. We had some action in different groups, but all in all, I would rate this past week as a neutral type action, and we'll see much more of that when we get to the charts. All right, the next slide you should see here is the relative rotation graph. Now again, this is a graphic that shows what areas of the market are improving, leading, weakening, and lagging. So this is something that we've been paying close attention to as of late. And of course the NDX, the NASDAQ, has been solidly in the leading group here, so no change pretty much in that. As you can see here over on the left side, all right, we've had transportation. Now, we've been talking about transportations now for a few weeks on these review preview videos, and again, this is a week over basis, and so we've been talking about that the transportations were beginning to turn up, all right, and in relative strength, and so that's the time where investors want to be looking at various components of the transportation index. All right, so that has been improving dramatically. Small caps, Russell, mid caps, again, all the trajectory here has all been, they're in the lagging sector, but they're all been improving, okay, within the context of the lagging sector. So they're on the verge now of entering into the improving quadrant up in the top left. So that area bears continued close watching for where the money is flowing. All right, and that's why we look at these relative rotation graphs. All right, we want to see where the money is flowing within the context of the market. Now, again, none of this here that we're presenting to you does not, guarantee any successful individual intraday trades. But again, knowing where the monies are flowing on a larger institutional basis, all right, helps give us perspective when we're all in the process of our day trading activities. All right, so this is the reason why I like to present this relative rotation graph, as well as the sector ETFs as we review this past week. All right, let's get right to the charts here. On the left-hand side, we have a daily chart of the S&P 500. Now we're into the September, fully into the September contract, and all the adjustments have been made over the past contract histories. And on the right-hand side, we have a daily profile of this past week. So let's just start over here on the left. Clearly, uptrend is in effect. The blue and the red lines are respectively the 50 and 200-day. The 20 period, the 20 period and 50-day moving averages here. So as we zoom in closer here to where we currently are, we have a rising 20 period simple moving average. Of course, we have a rising 50-day. So that combination in and of itself, the market is in a bullish uptrend. Don't let anybody tell you otherwise. All right. Now, we had a little push up to new contract highs at the early part of the week. That was not sustained. That's this large green candle here, and we had a reversal candle the following day. So that was a failure to push higher. There's probably a little short covering squeeze there that unfolded. What I want to point out here, though, on this particular chart is, again, we're in this uptrend, but notice, the market, the bears, have persistently tried to break price down through this 2420, 2415 area over the past couple weeks now. And at each interval, you can see here these large tails. All right, I just simply call them long tails, and candlestick people call them wicks, but I just simply call them long tails, and they're reversal candles. All right, so they, sellers tried to push it down. By the end of the close of that day, all right, buyers regained control and closed prices solidly. So really, there has not been a significant change, all right, below about the 24th, 28th, 24th, 30 area. So keep that in mind coming into today for this week. The 20 period moving average right now, and the simple moving average is at approximately 29.50. And you want to, but the slope of that moving average, by the way, is still up. All right. So when I see upward sloping moving averages, I'm deferring to buying pullbacks in the context of the larger picture until there's a change in the dynamics overall. So right now, it is consolidation within the context of an uptrend without any real change. All right, let's take a look over here on the right-hand side. This is where a little bit more of the activity was closer in, and we can kind of define some of our levels this past week, which, by the way, we'll probably be using into this coming week as well. So again, right here, this marker, this was, I believe, Monday. It was at the 19th, and they pushed up in the overnight. They tried to hold it early, and by the day's end and into the next day, they failed, could not hold the breakout, and then pushed all the way back down to the 28s here. So this 28 actually has been a marker for us this past week. And during our daily trade strategy segments each morning, where we send out to our members and subscribers our view for each day, we've been basically saying that this is kind of the bearish bull-bear line in the sand, so to speak, at the 24.28. So a couple times they've tested that. Bulls came in and absorbed those sellers, but really not been able to get above the flip side, which was about 38s. After that push up and down, 38s have become kind of a sticking point. So this entire week, this pretty much has been, aside from that, the early part of the Monday, Tuesday, the rest of the week was very neutral, tough to get through either side, and that's how we ended the week. So as we enter into this coming week, though, the same parameters I think are going to apply for us. All right, so 28s, 38s. For the bullish case, you want to look for a conversion above this 38 mark, right? Which conversion for us, which simply means penetration up through, and then any tests of the breakout point hold, and then there's the continuation move up. All right, we have some initial upside targets for the early part of the week, Monday into Tuesday. We'll be pushing 24.45s up through the 24.53s. All right, so that'll be, again, you can use that for actually Monday. On the flip side, should the market reverse now to the downside and find some resolve on the part of the bears, all right, again, same thing applies: a violation, all right, and a conversion, all right, to the downside. Range low initially is about 24.20, but the key cycle lows will be 24.18 down through about the 24.12s. All right, and again, that'll be valid for at least Monday, possibly now into Tuesday as well. From then on, it's recommended that you kind of take a look at our daily trade strategy. This is where we refine our levels and hone in on more of the action that we look for on an individual day-over-day-over basis. All right. Okay, so at this point, let's just take a quick look at the calendar. Okay, economic calendar courtesy of Econo Day, and the highlights I've highlighted in the red boxes. We have consumer confidence on Tuesday. Of going again week over basis on crude oil Wednesday, and we have GDP numbers and jobless claims, weekly jobless claims on Thursday. Outside of that, I'm not seeing anything that is really a standout. All right, and summertime has begun. It is official this past week, June 21st. And hopefully we'll still have some decent rotation activity throughout the summer. But again, summer months tend to be relatively quiet. Volatility, as we all know, has contracted dramatically, and it appears that most of the activity is focused primarily in the NASDAQ arena with the biotechnologies and the FANG issues and so forth. So there's going to be more of a kind of a focus on our part to just look at the NQ and where prices are trading intraday, daily there. Again, there's not a whole lot of rotation in the S&P lately, so it's just hard to watch and sit unless you're a scalper in the S&P. All right, so one last thing, this coming week here, we do have a webinar on Thursday, the 29th. It is a live trading webinar hosted by our friends at Infinity Futures. And so Patrick and the folks there have sent out mailers on that if you want to register. And we look forward to see you guys on Thursday morning for, I think it's going to last for about an hour or two anyways. And hopefully we'll get some activity enough Thursday to give you an idea of what we do and how we do things. All right. All right, and along with our webinar, we do offer a free trial period for 2 weeks. Typically it's 7 days, and we extend it out for anybody that attends the webinars or watches these videos for 2 weeks. So feel free to sign up for a free trial even ahead of the webinar at www.polarisTradingGroup.com/free-trial, as you can see there on your screen. And if you want to contact me at any point, feel free to david@PolarisTradingGroup.com, visit our website, PolarisTradingGroup.com, and contact Patrick Zielbar, your Infinity Future representative, if you have any additional questions regarding services and so forth. Be happy to answer any of your questions, and look forward to seeing you. All right, I hope you enjoyed this week's video, and good trading to everybody this coming week. Thanks.